Joining us for a more in-depth look at the markets as well as the moves that the markets have made, we're joined by Reko Nare from eNCA Capital. Mr. Nare, good morning. Good to have you on the SA Morning today. So yesterday was a big day as far as business is concerned, actually as far as the entire country is concerned. We heard Minister Reko presenting his medium-term budget statement. Have there been any reactions from the market based on what he said yesterday?
Hi, Tammy. Thanks for having me. It's always great to be on the show. Hello to your viewers. I think when you asked the question about have there been any big moves since the midterm budget policy statement, I think our local market, just to give some context, our local market has been under some pressure over the last few trading sessions in the build-up towards that midterm budget policy statement. But yeah, mainly coming from the diversified miners and the platinum miners. But with that said, I think a fairly positive reaction coming out of local equity markets and local bond markets after that midterm budget policy statements. We saw the JSE end the day up 0.12% at about 59,740. And the main drivers in yesterday's performance were financials and industrials, up 0.6% and 0.7% respectively. Another big move to maybe highlight was resources. We saw resources fall 1.5% yesterday, mainly on the back of the strengthening rand. So we did see our currency, strengthen by about 2% since the beginning of the week. And yesterday we saw the currency strengthen by about 0.68%. Obviously, the miners, they typically function as significant exporters. So when the currency does strengthen, they then do come under some pressure. But it's safe to say from a local perspective, from both local equity markets and local bond markets, the budget policy statement was fairly well received by the market, specifically in those two markets that I mentioned, which is bonds and equities.
So what specifically were the encouraging news for investors and market participants, if we can just get a little bit more specific about what actually served their particular needs yesterday? As you mentioned, there were positive reactions from the local equity and bond markets as well.
Yeah, so I think going into the midterm budget policy statement, one of the buzzwords or collection of buzzwords that was being thrown around was deteriorating fiscal outlook. So that's obviously been a concern for investors. But just to highlight, from our perspective, that's not necessarily isolated to South Africa or a South African-only situation. Global outlook, that slowed. We were seeing global yields pushing up by about 3%, 3% higher, which of course increases the cost of borrowing. So coming into the budget policy statement, National Treasury kind of digging into it. National Treasury, expects or predicts that revenues for financial year 2023 and 2024 will be about 57 billion rand less than originally estimated in the 2023 budget. And that's mainly due to, the weakness that we've seen in commodity prices as well as weaker global equity growth or global economic growth. But yeah, the budget deficit, that's expected to be about 4.9% of GDP for FY23 and FY24, with debt to GDP kind of stabilizing at 77.7% of GDP compared to the 73.6% that was initially projected in the 2023 budget. But yeah, with an answer to your question, I think what investors and what market participants liked was that the finance minister did kind of reassure the market that there is some credible rebalancing that's at play or a credible rebalancing process that's underway. That's one. And then there's also an emphasis on fiscal consolidation. And that fiscal consolidation is being implemented kind of through spending reductions and just more efficiency and more efficiency measures across government, which obviously that's what the market wants to hear. But with that said, the midterm budget policy statement, slightly positive, as I said, slightly positive for equity and bond markets, particularly given, the government's current position and particularly given government expenditure adjustments to stem that fiscal spillage that the investors are mainly concerned about.
Meanwhile, Rena, we're also awaiting the U.S. Central Bank's decision on interest rate. What are we likely to expect there, and what would the markets prefer?
Yeah, so we had the U.S. Central Bank announce that they would keep rates steady for a second consecutive meeting. We would argue that there's probably more of an emphasis, if you look at the South African equity market, there's probably more of an emphasis on what's going on in the US and kind of the tone that's coming out of the US Fed than there is in our, or an emphasis on our own local factors at play. And yeah, last night we saw the US Fed keep rates steady. As I said, for a second consecutive meeting, despite the threat of the ongoing strong economic growth that we've seen out of the U.S. It is important to note that, U.S. Fed Chair Jerome Powell did leave open the possibility for more rate hikes if required, in order to pull back or stem the reins of inflation. But as I said, the main emphasis was around the tone, which was slightly less hawkish, and the market did acknowledge that, and Jerome Powell did acknowledge that monetary conditions have tightened quite substantially in recent months. So market receiving that fairly positively. We saw the US 2-year Treasury push downwards by about 12.5 basis points to 4.93%, which is the lowest level since September. And we saw equity markets respond pretty positively towards that. We saw the S&P end the day 1.1% in the green, the Dow end the day 0.7% up, and the tech-heavy Nasdaq end the day 1.6% up. Now the focus will be on non-farm payrolls and non-farm payroll data. Any signs of cooling labor market out of the US is what investors will be looking to, and that number is expected to be out on Friday.
Well, thank you so much for the markets and the updates today, and as well as a look on the medium-term budget statement and how the reaction to that has been. You have yourself a great morning further. Thank you so much.